The Federal Reserve is set to hike interest rates for the 7th time this year. The move comes after yesterday's better-than-expected CPI report showed inflation at 7.1% year-over-year, down from October's 7.7%. ABC News business reporter Alexis Christoforous has more on this. Alexis, we got this report yesterday pointing to easing inflation, and yet still this rate hike. When can we expect the Fed to change course here?
Well, remember, we have inflation at 7.1%. The Fed wants it at 2%. So there is a ways to go. We're expecting that 7th interest rate hike from the Fed today. What is that going to mean for all of us? Borrowing costs are going to go up once again. So if you're looking at buying a home, financing a car, your credit cards, all those interest rates are going to go up. And I brought along some real-life examples for us. So if you have a credit card balance of $5,000, after today's Fed rate hike, which would be 7 for the whole year, you would be paying an additional $1,646 in interest just to pay off that balance. Mortgage rates also influenced by what the Fed does. This we know. If you have a $300,000 loan, right now the mortgage rate for a 30-year fixed is 6.33%. Your monthly bill, $1,863. That is still $562 more than you would have paid per month in January when we saw rates at around 3%.
Now, this rate hike is expected to be half a point, which is less than the 3/4 of a point hikes announced previously. What does that tell you?
It tells me that the Fed has a little bit of breathing room now to not be as aggressive as they have been, because they're starting to see prices loosen up on the inflation front, although we do still have a ways to go. So we're expecting the Fed today to raise rates, but also to give us a clue about what they're going to do next year. A lot of people still believe the Fed's going to be raising interest rates well into 2023 until they get inflation under control. They're walking the fine line, though. They don't want to push us into a recession. Right now, we have a very strong job market and strong consumer spending, and that's sort of what's saving us from a recession.
All right, so many people watching those numbers so closely. Alexis Christoforous, thank you.
Yep.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.